Good afternoon, everyone. Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Grid Metals Corp. Grid trades on the venture as GRDM, Golf Rio Delta Mike, and as MSMGF, Mike Sierra Mike Golf Foxtrot on the OTC QB. Hope you enjoy today's program. It will also be available in on-demand replay about an hour after we wrap up, and you can get it at amvestcapital.com/replay. Feel free to chat in your questions in the question pane of GoToWebinar, or simply email them in, and we'll ask the questions, and we'll ask the questions in real time. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector, and importantly, this call is most certainly for informational purposes only. There's no advice or solicitation implied. With that, we have with us Robin Dunbar, President and Director, and Dr. Dave Peck, who is the Vice President of Exploration and Business Development. So, Dave, we're going to make you presenter if you turn on your webcam, sirs. Robin is also president of Mustang Minerals and a director of Maqua Mining, and a former director of Western Areas, an Australian nickel producer. Dr. Dave Peck, obviously a geologist by background, experienced in mineral exploration and mining industry, most recently VP of Exploration for North American Palladium prior to its acquisition by Impala. And he was before that global nickel commodity leader for Anglo American's exploration division. And he's got a doctorate PhD in geology from Melbourne University in Australia. So welcome to the show. Please turn on your webcam, sirs. Got one?
Good afternoon.
There we go.
There we go.
Okay.
Over here.
See you on the other side, and we'll open it up to Q&A.
Great. Thanks very much, Campbell.
And thank you all for joining.
Yeah, thanks everybody for listening in today. We're pleased to make a presentation here about Grid Metals. We've actually, the Grid Metals was formerly named Mustang Minerals, so it's a company that's been around for quite a while. And we're focused on the nickel, copper, Palladium projects, all located in Canada, either in Ontario and Manitoba. So I'll just, we may have some forward-looking statements in our presentation, and this is a cautionary disclaimer to that. Thank you, Dave. Yeah, so just as Campbell mentioned, Dave and I are the two members of senior management here at Grid. I'm based in Toronto, and Dave's in Winnipeg, and I've been in the business for I guess since 1996, just after Bre-X broke in the market. We started in the business, and you know, it's been an interesting ride. And along the way, I had some experience as a director of Western Areas, which is a producing nickel company on the ASX. They have two mines down in Western Australia that. When I was with the company over the years, we went from exploration through to discovery. So, you know, it's kind of a path that I've been down personally, and we think the next few years is going to be a fantastic time for Grid Metals, with a tailwind of you know, positive metal prices, which we haven't seen for a number of years. And Dave, getting Dave to join our team about a year ago, it's been a great development for us. And Dave, I think it's fair to say, is one of the leading geoscientists for magmatic systems, which always include the PGMs and nickel, copper, cobalt. And Dave has been around the world. I think has looked at most of the you know, important deposits in the world and worked on a lot of them. And he was with North American Palladium prior to his acquisition by Impala Platinum, which was a pretty important event in the Palladium world. And before that, Dave had you know, extensive experience in nickel as well. So he brings a lot of hands-on experience and theoretical experience to the company. Our market cap is it's under $20 million. It went up a bit today on our announcement. We have about 77 million shares outstanding. And we've been working with Red Cloud in Toronto, is a boutique mining brokerage, and they brought in some institutional investors to the company over the last year. And Western Areas currently owns about 6% of the company as well. So the next slide, Dave. Just again, a bit of just one or two slides on the commodities here. It's I think if you look at this, the mining space, there's fewer nickel, cobalt, PGM companies in particular versus perhaps gold companies. These deposits are hard to find, anywhere in the world. And nickel is a key one used in the battery technology for in the batteries and the cathodes to increase energy density and range, which is really the key technical nut that the battery industry is looking to crack. I've got a chart here on the bottom that I think is generally accepted that there's going to be to a 2 million ton nickel market. There's going to be about another 900,000 tons of nickel required to come from primarily green sources, because the customers are in the auto sector, and so that's a lot of nickel to come over the next 10 years. There's copper is not as directly related to the auto sector, but there's an awful lot of infrastructure, and call it under the heading of green tech, that is going to be pushing demand for copper up. And most recently, Goldman Sachs had a very bullish copper outlook for this year and over the next 10 years. And also lithium, cobalt are for us more minor metals, but again, similar kind of outlook in terms of much more demand coming from EVs and battery technology in general. And these are all metals that Grid Metals has exposure to. And one of our key projects that we're working on is a palladium property, East Bull Lake. And if you look at the chart on palladium, it's really been one of the best performing metals in the last number of years. It's gone from just over $500 an ounce to close to 3,000 today, and this has been a steady climb. And for the palladium market is not as well known, but I just like to say that it is an LME metal. It's a precious metal. It is an industrial metal. It's highly strategic in that the auto companies use it in their auto catalysts to reduce emissions. And yet most of the world's supply comes from South Africa and Russia. And a lot of the mines in South Africa are quite mature. And there's not a lot of new projects on the scene in the world. So the palladium market is in a significant deficit. And there's very few quality palladium exploration projects. There's some, but we think ours stacks up really well. And the last two, producing projects in North America have been acquired by South African interests. And this is a way for them to balance their portfolio more towards palladium versus platinum, and more towards political risk, jurisdictional risk in North America. So Stillwater Mine being in Montana, and the Canada's only palladium producing mine is in just outside of Thunder Bay. So our goal is to come up with a mine that has scale production, 200,000 ounces a year type thing, and then the last one of those sold for $1 billion. So that's kind of our aspirational goal. And just a quick overview of where our projects are. We have three main projects. They're all, call it in southern Canada. Makwa Mayville, which is an advanced stage polymetallic nickel copper PGM project. That's just outside Winnipeg, which is the provincial capital, about an hour and a half. And there we have a large greenstone belt. We hold a really significant land position. It's an interesting area because it's the site. We're right next door, actually, to one of the producers of rare metals, and there's firing up lithium production there. So it's going to be Canada's only producing lithium mine. The mine's been in operation since 1968, and famously supplied to Corning with the lithium spodumene for the Corning ware. Our Bannockburn project is just outside of Timmins, which is a major gold mining center in Canada. And there we're looking for a Crawford type Canada Nickel company type deposit. It's a project we got from Outokumpu many years ago. It's got some previous holes in it, and we just started a drill program there looking for a large tonnage disseminated nickel deposit. So that'll be an interesting program for us. And then East Bull Lake, which we put out a press release today on, and we think it's the top palladium prospect in North America. And again, it's a large layered intrusion. It's 20 kilometers long. It's mineralized end to end. And we think we're really making progress, and we're starting to get some good drill results and really interesting property. So I think from there, I'm going to hand it over to Dave, and he's going to just go through the highlights of of our projects.
Thanks, Robin. Thank you, Campbell, for hosting us, and thanks to everybody for joining in. We put out some news today. We've had some pretty good results on our East Bull Lake Palladium project. There's a little map here on this slide showing the city of Sudbury, big mining camp, as you know, in Ontario and Canada. And we're only about 45 and 50-minute drive from Sudbury on the Trans-Canada Highway. And our property is just located about 30 kilometers north of the Trans-Canada. There's power, rail, full mining camp infrastructure in Sudbury, 2 smelters that treat this kind of material. So we're in a fantastic jurisdiction. We're at the exploration stage, and I think it's fair to say we've learned a ton about the prospectivity of this complex. In the last 12 months, I joined the company early 2020 and really have focused on East Bull Lake to try and get it moving at a time when palladium was on the rise, and fresh on the heels of my several year stint with North American Palladium. So I had a lot of ideas. I thought we could unlock the value here, and I think we're well on the way to doing that. So I'll just give you a 3 or 4 slide intro to the project and leave you with some thoughts of where we're going. The outline of the intrusion is the white outline here. It's 20 kilometers long approximately, as Robin mentioned. It's cut by these major faults, which are very interesting features. They're vertical structures, and they definitely could be pathways for the mineralization that we're chasing. So they could be feeder structures, any one of these. We've been focused on a particular area here in the center of the intrusion called Parisian Lake. The symbols that you're seeing are color-coded in size to the palladium grade. Most of these are surface samples, but some are from drill core. There's been over 100 holes on the property, but you scatter that over 100 or 20 kilometers, and it's not much drilling. And as we're finding out, you have to do fairly systematic drilling to unlock the, really understand the mineralization, to unlock the potential. So we've had 3 sort of short programs in the last year, starting in March of last year, or sorry, May of last year. And we just concluded our 3rd short program. We've been kind of going $1 million at a time, trying to gain knowledge and test our theories of how the mineralization here forms. But the keys are really that you've got surface exposed mineralization in a very distinct geological unit, sort of like how they recognize the reefs in South Africa in the Bushveld and in the JM Reef in Stillwater. A very distinctive unit. It probably is most closely resembles the Platte Reef horizon in South Africa, which is really printing money right at the moment for Anglo-American. And of course, Ivanhoe's hoping to get their mine really going south of the Anglo-American pit mines there. So we're at the exploration stage, but we're not far off from the resource delineation stage. And if things go well, I think we'll get there in the next several months. So just we'll go through this. This map is a mag image, so it's showing the magnetic field over the intrusion, the East Bull Lake intrusion. And what we're actually seeing is a really good correlation between the lower mag areas, which are light colors or blue, cooler colors, and the hot colors generally don't correlate with any of the known mineralization. So that's one thing that we've learned from the geophysics. This is the geological map, and what we call now the basal layer, which is the key mineralized unit on the complex, is you can see in orange here. It straddles the southern contact of the intrusion, and it can be up to 200 meters thick. We haven't actually found the deepest part of it, I'm sure, yet. It's outcropping, especially right along the contact, and like I said, it resembles the Platte Reef. The key that we've found, and I think that's going to unlock the value for us, is that a particular geophysical property of this layer is able to be detected with airborne surveys and ground surveys, electrical surveys. So the next map I'll show you, it will demonstrate that. What we're trying to show here is just the size potential of this mineralized layer, which, as I said, is barely drilled. In terms of something that's this well mineralized, having this little drilling on it is quite remarkable. So we've got a huge opportunity to increase value by getting to the resource stage and then hopefully moving towards advanced project and potentially development down the road. And so what we're looking at here, the green arrows are indicating mineralized trends that have been determined by surface sampling and some of them by drilling. And so these are things we're very confident in are worth pursuing in their own right. And as you can see, there's many of them. There's 7, 8 really good trends. They all have the same characteristics, the same geology, the same geophysical response, the same grades at surface, and the same potential to host either really thick pit grade resources and what we call sort of the 1 gram threshold. 1 gram of palladium is kind of our target for open pit or palladium equivalent. And then the underground potential would be on the higher grade sections, which we've been seeing at Parisian Lake, including massive sulfides in the footwall, which we just reported on today in our press release. So the first significant high grade intersection from this area we've been drilling, Parisian Lake. So that's kind of the geological overview. I won't get into the details. In terms of similar projects around the world that you could directly compare to, like I said, the Platte Reef is one. Another one would be Lactazile in terms of the rock types and the palladium dominance of the PGEs that are in the mineralized zones. And some in Finland, especially the Arctic Platinum Project, which has been around for many years. It still isn't in production, but it's the same suite of intrusion. It's the same age as East Bull Lake, the same geological event. So this was a global event. It's not a little isolated intrusion. It's part of a gigantic magmatic event, and those are the things that we generally look for PGE, copper nickel sulfide deposits. They're almost always associated with these really major magmatic events. This map is the electrical map or resistivity map of the property. So it's basically showing you rocks that have very low electrical resistance or low resistivity in the dark blues and purples and pinks, and those that have high resistivity or they don't conduct electricity very well. And those are the lighter colors, the whites and greens and yellows. So what we found is a very good correlation between the geology that we're looking for, that mineralized basal layer, where it occurs, where it's mineralized, and these resistivity anomalies, these resistivity lows. There's the scale bar just for reference, 3 kilometers. Our Parisian Lake zone that we've been drilling is in here. You can see we put a bunch of holes in the last year, and most of them have hit, well, all of them have hit the mineralized layer, and some of them with really good grade thicknesses, and I'll show you that on the next slide. So we've got, you know, several sort of more advanced zones. I've circled or put boxes around 3 of them: Moon Lake, Parisian Lake, and the central zone over in the eastern part of the intrusion. Then we've got these giant resistivity anomalies, which we believe is the unexposed or not outcropping, but very shallow extension of these mineralized areas. So these are legitimate and really important exploration targets. So our next phase of work, we're hoping to test some of these. There's no drilling on most of them. So there's the opportunity to make, you know, multiple discoveries in this mineralized layer, which we now believe we can pick up with geophysics. So that was a missing here on the property for many, many years. And it's now the confidence we've gained over the last 12 months that allows us to have a very clear vision of how we can move from exploration to discovery and then to resource drilling. And then sort of zoom in on the Parisian Lake area. It's in our press release today. There's a bit more detail there than I can cover here. We reported 3 new holes. We've drilled 15 holes in the last 3 months, and we've reported on now 9 of those. There's still 6 more to be reported on. The holes from this year are shown in red, and the holes from last year are shown in blue. Our discovery hole was from late last year, and we reported that in December, and it had 119 meters over that threshold of a gram palladium equivalent. And there were some higher grade sections in there, including, I think it was a 35 meter section of almost 2 grams, and then 14 meters of about 3 grams. So in terms of, you know, dollar per ton, you're doing the quick calculation, US dollars, at say nearly 3,000, that's almost $90 a gram for palladium. So 3 grams is $270 in situ value. We've also got platinum, copper, nickel, and sometimes cobalt credits. And we haven't done any rhodium analyses yet, so that'll be coming soon. We're doing our first sort of suite of rhodium analyses to see what the rhodium contents are like in this area. So we're pretty excited about the news today. We hit a high-grade massive sulfide vein in the footwall. It wasn't very thick, but it's in a 2-meter mineralized sort of horizon just below this main sort of mineralized unit, the basal zone. So it's in the immediate footwall, and it ran 68 grams palladium equivalent, and it was about 37 grams of actual palladium, and then 21% copper. So it's almost massive chalcopyrite. That hole also hit some pretty good grades over decent widths, 8 meters of 2 grams and 35 meters of nearly a gram. And then hole 7 to the south, 123 meters, a bit lower grade, but 35 of those meters were a gram palladium equivalent. And then hole 8, which was just north, and actually we probably stepped out a little bit too far to the north, it did hit the mineralized layer fairly deep, and there's still decent grades. The widths are a bit narrower. And as we compare now back to that resistivity map that I showed you there, it was actually this hole is just off the anomaly. So if we put a bit more faith in the resistivity when we were planning this hole, we probably would have moved it south. But that's ahead of us now. There's a potential feeder structure between, and I don't think it's any coincidence that the best grade thicknesses we're seeing in this big target area are right near this structure. So there's a couple 100 meters across this fault on either side that haven't been drilled, and the structure itself hasn't been drilled, but we're pretty sure it's a vertical fault, and it may be the feeder to the mineralization in this area. So it's a high priority target for us going forward. So that's kind of the nuts and bolts and quick update on East Bow. We don't have a huge amount of time, but certainly if you're more interested to talk about it, get in touch with us through our website or just give us a call, and we'd be happy to go through it. In terms of our nickel assets, there's two main ones. One is in Ontario, just north of the city of town of Metatron and south of the city of Timmins. So like all our projects, the infrastructure is fantastic. The paved roads, all year round access. We can drill 12 months of the year. Timmins mining camp, still a vibrant mining community. Lots of support for mine development in the area. You've got renewable power. You've got all the roads and rail links close by and close to the city of Sudbury as well. So a great location again. This project it has two sort of styles of mineralization. And it's not, sorry, I should point out, it's 100% owned by Grid. There is a 2% royalty due to Outokumpu Mining, who we acquired this property from approximately 20 years ago. The current focus is on one of those two styles, which is the Crawford deposit type, low grade but large tonnage, sort of bulk mining opportunity, what we call the B zone. And the B zone is shown in cross section here. I'll show you a plan view map. But basically what this section is showing are the assay bars for nickel. And you can see there's a sort of a higher grade core zone that can run up to 0.8, 0.9%. And then the sort of broad envelope of lower grade. These assay bars are actually cut off at about 0.2% nickel, so you don't see anything less than that. So everything in yellow is over 0.2. So some really good thick intersections of low grade nickel. The key to this style of mineralization is all in the metallurgy. It isn't conventional magmatic sulfide. It's not like the ore bodies in Norilsk or Sudbury. It's actually secondary. It's a low temperature secondary style of mineralization, and it features a mineral called hazelwoodite. And don't expect anyone to know or remember that, but that mineral is key because it holds 74% nickel. So it's really nickel rich mineral. And what that means is if it's all hazelwoodite and you float it, and it does float, you can get a super high grade concentrate. So the real key element of these sort of bulk mineable Crawford type deposits, and there's not many of them around, is the mineralogy. It's the completion of the alteration that produces this hazelwoodite, that it goes to its final stage, and the only mineral you really see that's carrying nickel is this hazelwoodite. So we're about to find out if that is the case. We have these historic intersections on the B zone, which is actually, I'll show you on the next map. This is a magnetic map again. This is the magnetic high that is associated with the ultramafic complex we call the northern complex. And this is the host to not only massive sulfide, which I haven't talked about yet, but the B zone. The B zone sort of sits right in the middle. It's on the peak of the magnetic response where the mineralization occurs. And you can see some of the historical intercepts. And I encourage you to compare these to what they have at Crawford. And you'll see that our grades and widths compare very favorably from this older drilling. And this dates back to pre-2000 and some holes in 2004. So it's been almost 15, 16 years since there's been any real work on this trend. And of course, Crawford got our attention and how they moved from a penny stock to $300 million market cap in a short period of time based on Crawford itself, that deposit. So we're at the stage of almost being able to get into resource delineation. We wanted this one validation program. So we're going to drill about 10 holes. There'll be about 2,000 meters total. We're going to test the upper sort of open pit potential of this long trend. It actually extends the mag anomaly for over 2 kilometers. And parts of it go further north, so it may be, in fact, as long as 3 kilometers. But our main focus is on this sort of 1.5 kilometer segment that we're showing here. And we'll be crossing this axis several times on several sections. And we will drill one hole right down the guts of it to see how deep this goes. our mag modeling shows that it's a near vertical mineralized zone, and it may actually extend well beyond pit depth, several hundred meters at least, maybe even deeper than that. So it's got potential for sure for open pit. Our target is kind of 100 million tons of that 0.3, 0.4 with a high grade core of maybe 0.6. That'll get us over the hump in terms of the economics. And then that should deliver recoverable sort of contained nickel of around 200,000 tons. So that's kind of the minimum threshold we're looking to discover here. We do have massive sulfides. Again, we don't have a lot of time to get into it. These are typical what they call Cambalda type massive sulfides that can be quite high grade nickel, up to 4% we've got on the property. There's 3 zones that have been discovered. There's a number of geophysical anomalies that haven't been drilled yet. And obviously, you know, even a small resource on those sorts of things would help the economics of a big bulk mining project. So some early sort of return on investment and help to pay the capex. So that's Bannockburn. So stay tuned. We started drilling a couple weeks ago, and we will be releasing results over the next 2 to 3 months. So maybe in about 6 weeks or 8 weeks, we'll have the first results ready to go to the public. Finally, we'll just close off with Makwa Mayville, our Manitoba asset Robin mentioned earlier. This is the most advanced project. Just in terms of location, this map is a kind of geographic but geological. This gray shape here is what they call the Superior Craton, which is really the treasure trove of you know, base metal and gold deposits in Canada. And also along the edges of this are all the main nickel deposits in Canada, the Thompson mines in Manitoba, the Sudbury mining operations, the Labrador Trough deposits, including the iron ore, and the Raglan mining operations up on the north side. So being near this contact, we think, is important. Our Bird River Greenstone Belt property, which is the which hosts the Makwa Mayville, the 2 deposits, is just literally 30 kilometers off this margin. So that's a great location geologically. The infrastructure is fantastic. Again, road accessible and year-round access for drilling. And there's 2 deposits. The Mayville deposit in the north is pit constrained. It's at the PEA level. Scoping study was done in 2014. It's well out of date now, so we'll be updating that with new, much better prices in foreign exchange, as well as some better metallurgical information that we've done since that was published in 2014. 164 kilotons of contained copper and nickel, copper being dominant at Mayville. And the other one is the Maqua nickel deposit down in the south. And that's got currently pit constrained 54 kilotons contain nickel greater than copper. I'll show you the resources in a second. And just while we're looking at the property position, here's the southern part of the belt, the northern part of the Greenstone Belt, and the Grid Metals property on both. So, you know, there's the scale bar, 10 kilometers. We got 20K on the south side, you know, almost 20 on the north side. And I'll just point out, we also have a lithium property, which has a historical resource. It's not compliant of 3.5 million tons of 1.28% Li2O. So that's a good start. There's lots of exploration upside. We haven't really done anything with that, but it may be part of the mix of assets we have in our pocket as we move forward in this belt. I should point out too, a big development recently is that we've renegotiated a long-term exploration agreement with the local First Nation. And without that, we weren't able to do a lot. Now that we've got their full support, we're able to move forward as we want to. And another real advantage of this project is actually that, you know, we can move from PEA stage here, scoping stage, to development on a very abbreviated timeline. partly because of the location and infrastructure, partly because of the First Nations agreements, the nature of the ore, and also the huge amount of work that's already been done. There's $30 million have been spent on this project already. So we're kind of, I would say, dusting it off, but we can restart work in a meaningful way because of that agreement. Here's the resources. I'll leave this with you. It's on our website. Maqua being the nickel-rich part. This is pit constrained, so of course we're taking in some of the lower grade halo, 7 million tons at 0.6, and then Maqua and then Mayville 26.6 at lower nickel but higher copper. And again, because this is pit constrained, you're playing with the numbers, the prices, price forecast, and seeing what you can get, maximize the metal value. The other way to look at it is there are high-grade cores in both of these projects, Maqua and Mayville. Maqua's got a higher grade copper core, it's over 10 million tons. Sorry, Mayville, high grade copper core over 10, closer to 15. Maqua's got a high grade core around 1% nickel. It's in the sort of 3 to 5 million ton range, depending on how deep you want to go. And at least for Maqua, we're looking at the underground option. It mines smaller, but mine higher grade. And that trade-off study just started actually this morning in earnest. So we're moving forward on that with positive results on that. And like I said, changing the price deck and the FX, we're kind of well on our way to saying, yep, we will redo the PEA for sure this year. It's worth the investment, and it's going to look a lot better than that 2014. And keep in mind also, because of our dominant land position, there's a huge amount of exploration potential here. So we look at this as the start of a camp, a mining camp for nickel and copper in southeast Manitoba. And we, have the challenge of finding more, but we think we can get a positive, set of NPV and IRR numbers now on the next PEA, and attract a partner in to move forward with. Yeah, so I've kind of covered a lot of this, and yeah, I think we'll just move on. So at this point, I'll turn it back to Robin. And thanks.
Yeah, and thanks, Dave. I think that's a good overview. And I just put together some of the kind of well-known companies in the nickel, palladium sectors. The companies that we chose was Talon Mining, which has it's a higher grade massive sulfide underground project in Minnesota. Blackstone, which has a nickel project, similar kind of open pit, lower grade in Vietnam. Tartisan Nickel, which has a resource, they're working on a PEA in Ontario, the Kenbridge projects, and Palladium One, which is it's a more palladium dominant project in Finland. And the metal, so the contained metal, and that's the published resources of the companies. And I used a standard price deck, $17.25 for palladium, $8 for nickel, $3.25 copper, etc. And what this shows is the amount of metal in these deposits. And this is just kind of a general idea of, okay, in these, resources, which are 43101 compliant, how big are they, right? So, if you look at these, there's the range from the smallest is Tartisan, which is about $1 billion. And again, they're about 7.5 million tons, about 0.65. That's similar to our Maqua deposit. And with the Blackstone is the highest. And then the market caps of the company, right? So you can see the Talon, which is a higher grade deposit, has $422 million Canadian versus our 17. Palladium One has a smaller, about half the resource, $77 million. Our, for example, per ton open pit is probably, I think it's higher than Palladium One. But anyways, the bottom line is, I think we have a significant amount of metal, which we think we can show is going to be a project that can be developed during this next cycle, and a pretty low market cap compared to our peers. I think part of that is that we haven't done a lot of work on this project in the last few years due to low metal prices. But part of it, if you're a shareholder of Grid, what you're getting is projects that we've held for a long time because they have huge geological merit, and you know, we knew the cycle was going to come back at some point, and you know, we think the next you know, number of years is going to be the right environment for developing these types of projects. And I think for us, you know, adding Dave to head up our technical side is really one of the key ingredients as well. And I think the last slide we have, or the last one or two slides, is just, you know, what to expect, you know, in the next period of time for us. And you know, we still have some more another 6 holes to report from East Bull Lake, including some step out holes about 500 meters east of where we've been drilling. And at East Bull, we're also doing some met work, and we want to establish the potential for making a really high grade palladium concentrate. And we're looking at getting some rhodium analysis, and that's coming over the next couple months. Bannockburn, we started drilling, so that you know, that drill news will be coming over the next 2 to 3 months. And then we're starting on the trade-off studies and PEA at Makwa Mayville, which, you know, we're targeting to have out by the end of Q3 this year to show that project is an economic one. So we got a lot on the go in the company. We like all our projects. You know, we think we have a good mix of projects at the exploration stage, but also more advanced. And you know, we're looking at you know, trying to move them forward. We're pretty mindful of you know, ESG principles, and you know, as a small company, there's only so much you can do, but you know, we try to operate a very environmentally friendly manner. You know, we have agreements in place in all 3 areas that we are with the First Nations, so that we have signed exploration agreements and try to include those in benefits of our projects, which will be very helpful, a little more expensive in the short term, but very helpful in the longer term, and incorporating good governance into our plans and programs. And you know, we're not stopping. We've got some really exciting new developments we think coming in terms of other projects that have, you know, great upside or low cost and in really good jurisdictions. And you know, we're going to try to bring those on and add even more value to the project. So you know, that's really it for us right now. And you know, we think it's you know, pretty exciting time for Grid Metals. So Campbell, that's it from our side.
So
unless
let's try and squeeze in some questions. You guys
sure. Yeah.
have a lot to say. So
Yeah.
Any metallurgical test work on the samples? Maybe you covered that, but I mean.
Sure. Yeah, you know, we've been trying to at all these projects do you know, metallurgy early stage. So Makwa Mayville, that's more advanced. We've done a lot over the last number of years since the PEA, and basically we can produce good copper concentrate, really actually excellent copper concentrate, and good nickel concentrates, which is really the product you're selling. And then at East Bull Lake for the palladium, we're doing some early stage testing now, and we'll do some testing on the Bannockburn samples as well. So yeah, we try to do it early, and you know, there's no point in trying to develop a project that you can't make a good saleable product.
How much money are you planning to spend on each project in the next 12 to 18 months?
Yeah, you know, that's a good question. Probably more than we have in the bank right now. We're under 2 million in working capital, so you know, we will have to raise some more money at some point. What we're funded to do is complete our East Bull Lake and our Bannockburn drilling, and certainly start on our Makwa Mayville PEA. So we're gonna get the results in from our projects over the next few weeks and months, and then certainly look at doing some kind of additional capital raise. But you know, all these projects need significant money, and we want to get in that cycle where we're drilling and getting good results and pushing the share price higher, and you know, keep going that way.
Any idea of why you're getting, you know, valued at 20 million and Canada Nickel is getting valued at 285 million, and you've got, you know, better grade?
Well, we don't have a resource. They've spent quite a bit of money drilling, and they're through the resource phase. So, you know, we just have the last holes we drilled there were back in 2005, you know, we don't know how continuous the mineralization is. We don't know what the metallurgy is. So they're further down the track than us. But we think in terms of an aspirational, you know, project to put on the board, you know, if we have some good drill results, like some of the historical ones, people will see that, you know, that our project certainly has potential. So that's, you know, one of the reasons we're doing it, and we think the market might pay attention. But also, there's clear potential there if the metallurgy is good for a lot of pounds of nickel, a meaningful, scalable project.
Gotcha. I'm going to pass this over to Adam and Artie, and maybe Adam, you kick it off. Our new senior analyst of mining research over at Amvest, and maybe throw some tough curveballs at him.
Okay, I'll hand this over to Dave then.
Yeah.
Thank you. So, you know, I'm just thinking here, you know, considering the success of, you know, Canadian nickel and you know, building a lot of tonnage, you know, at low grades and what looks to be, you know, some advantageous metallurgy that you have there. You know, I just can't help about, you know, why not focus there to build up the tonnage at Bannockburn. You know, is it the you're just not sure about the continuity? Is that the main issue?
Yeah, that's the main issue at the moment. So yeah, Robin and I have this discussion a lot, and you know, you question, you know, even at Crawford, you know, how much of the nickel is actually recoverable, and so they've done their met studies, but the nature of this mineralization is that you got to prove it all the time. It's not like, you know, pentlandite, you know, classic nickel sulfide, that, you know, you can either see it or it's easy to determine its abundance. Hazelwoodite, it's hard to see in core. You got to do sulfur analyses and calculate the nickel sulfide content. Then you've got to actually go to and get some petrography done, or petrography to confirm that it's actually hazelwoodite. So there's a sort of a longer set of steps you have to take to get that confidence that it's recoverable, consistent, and then you can go to, okay, now we can start infill drilling or drilling out a resource. So
don't get us wrong, Adam. We really like the project.
Yeah.
And we did do a metallurgical study back in 2005 at SGS, which showed that all the nickel, sulfide nickel, was in hazelwoodite, and that it floated. So, you know, from that, the specs that they quoted we should be able to obtain were at least as good as what Canada Nickel had. So we're optimistic about this. So we're drilling these holes as fast as we can, and if the results are good, believe me, you know, I'm confident there's going to be funds there to, you know, we'll be trying to drill this out as quickly as possible. So we're not dilly-dallying or whatever. When we did make the decision to finally go, you know, it wasn't until quite recently that price of nickel really kind of broke out, and it just wasn't our key focus. But yeah, we like it.
And just to follow up on the metallurgy, the C zone high grade, is that more pentlandite?
Yes. Yeah. That's the dominant mineral there. So that's kind of like your classic Kambalda type, Western Australia komatiite related nickel. So they just basically accumulate pentlandite and pyrrhotite at the bottom of a lava channel. That's exactly what we have there. So they take a lot of drilling to find, you know, a reasonable amount of tons, but it's open, right? So all of these things could be really important to the property down the road. But right now, first prize, let's repeat at least partly what, you know, Mark Selby and Canada Nickel have been able to do with Crawford. We should definitely do our best to you know, match that trajectory and hopefully unlock the value of the bulk tonnage mineralization here.
I guess just a quick question on the C zone. You know, do you have enough drilling into it that it looks, you know, fairly consistent as far as the widths and the continuity, or you don't know? You don't have enough drilling?
I think it's been drilled to, you know, not too deep. Lots of holes closer to surface, and it's not big. And we don't even have a resource estimate on it, Robin. I don't think.
Well, it's
internal.
We got a firm to look at, you know, what's there, and you know it'll be between 200,000 and 300,000 tons at, you know, around 2%.
Which is,
it outcrops,
yeah.
So it's not insignificant.
No.
But you know, it's open at depth, but you know, we put 50 holes into that.
Yeah.
And then there's another one, the Talwig zone down to the south has, you know, up to 4%. That, you know, that one is similar. And, you know, but that starts at, I think, 250 meters down. So, you know, you're going to build up tons a lot slower there. I mean, these lenses here are not traditionally as big as they are in Western Australia, right? So,
well, no. The ones that people know about in Western Australia are bigger, but classic lens size is 100,000 tons or less.
Okay.
There's just
but
lots.
Anyways, the B zone is going to be that's the number one prize for us, because it's, you know, we're looking for 100-meter widths with big swaths of floatable nickel.
Mm-hmm.
Yeah, but we, you know, there's definitely potential, but you know, we've been focusing on our palladium property and now this one, and we have to prioritize.
Yeah.
And the palladium, at East Gold Lake, you know, just getting back to the metallurgy there, would that be, you know, producing in theory, producing a copper palladium concentrate? And is that something that you can get good payabilities on if you're sending it to Sudbury?
Yeah, for sure. So when I was with North American Palladium, I was one of the 3 people in senior management and involved in all those negotiations with the smelters. We did a couple while I was there. One with what was Inco at Vale, and one with Glencore. And they love this stuff. They can't get enough of the palladium-rich con. And so they can make a really good margin and still give you really good competitive payabilities. So definitely it's a bulk con. It's actually super high value. We're talking, you know, 8 or 9 ounces per ton of palladium in the con. And it generally would have 10 or 12% copper. I think our copper grade will be higher here. It's probably going to be closer to 15 to 20, but it's not a copper con, it's a palladium con. Now 80% plus of the value will be the palladium. And you know, it's the trucks, we used to shake in our boots when the trucks would go down these winter roads out of the mine, drive the con all the way to Sudbury, because every truck had, you know, 40, 50 tons of concentrate on it. It's worth a lot of money.
You should bag that stuff up so you don't lose any on the way.
Yeah, well, it was bagged eventually, but they learned some hard lessons over the years there, for sure.
And I think that's why we're doing an early stage metallurgical test here, because some palladium projects actually, to your point, Adam, are really copper concentrates with high precious metal value, where this is a palladium concentrate with copper and maybe nickel.
There'll be nickel. There'll be payable nickel here for sure. Yeah.
So we think that's something that's desirous.
I'm gonna pass it on to Erdi, and then if we have time, I'd like to circle back.
Okay.
Thank you. I have just one quick question. When we look at the Makwa Mayville PEA, do you think it will be fair to say it's a low capex but high operating cost operation right now? And what is the most important item that you expect to change in the updated PEA?
Well, the first thing is when there's 30 million tons at Mayville that has when we did the PEA, we used 40% nickel recovery, and we did a series of test work at XPS, the Glencore lab in Sudbury, and they came back and said your nickel recovery is going to be 68%. So that added, if I recall, about 30 million pounds or about 25 million pounds of payable nickel into the project. You know, we think the other thing that's going to make a difference is the perhaps bulk mining at the higher grade at Maqua. So we're looking at maybe a slightly smaller scale operation, but higher grade. You know, the tons are going to be in line with, I mean, the cost per ton with other, you know, projects of similar scale in Canada, because there's, you know, it's a southern Canada environment. But you know, the economic nut is just, you know, you want to pay off that when you build your concentrator plant as quickly as possible. So since the PEA, there's better metallurgy, the FX is better. You know, the price of palladium, there's over 200,000 ounces of palladium. When we did the PEA, we used $800 palladium, so that's going to be higher. So there's you know, the capital costs, we had those checked a few back in 2019. They're going to go up some, so you know, it's not all going to be all positive, but you know, there's a lot of metal sitting in pits that are, you know, we can get right at it, and you know, so in a positive price environment, that, you know, I think the project's going to look better. Yeah.
Thank you. Adam or Campbell?
Oh, no, we've reached the top of our hour, and I want to thank everyone for tuning in. On your way out, please share your feedback. You'll be queued for it automatically and in an email. amvestcapital.com/replays. You'll find the replay in about an hour. And with that, just to sort of summarize, and I'll let you guys close, but why buy now? You've got a long road ahead, so why May 5th, 6th?
Well, we've got a lot of exciting exploration discovery in process as we speak, and at the same time, we got a lot of value in the company in terms of a project that's got a pretty big resource and good potential to go into production, and a strong tailwind developing in the commodities that we're exploring for green economy going forward.
Yeah, great. Thank you, everyone. And till we meet again. And
thank you.
Appreciate your
Thank
time.
you very much, Amvest Group. Appreciate it very much.
Cheers.
Thank you.